Hey traders, welcome back to another Sunday video where we talk about trading setups for the week ahead. Today we're going to be taking a look at a large list of markets. Going to go rapid fire on indices, commodities, cryptocurrencies, currencies, and maybe even talk a little bit about bond yields, which had an interesting week this past week. Speaking of this past week, on Friday we had the NFP report, which caused markets to fumble a little bit. I did a full NFP video on Friday, so make sure to check that out on the channel if you have not already. I broke down the NFP report to be what I actually kind of considered pretty strong for the dollar index. I mean, initially there was a mixed reaction in markets. If we go back to that candle, look at how horrendous that NFP candle was. But shortly after, if you were watching the live stream or watch my video on Friday, I pointed out that the overall kind of numbers looked very strong for the dollar. Later on, the market continued to push higher. There was also a little bit of tariff concern that came in on Friday. And that kind of set the tone for the end of the week last week, where we actually saw risk assets get sold off pretty heavy. Here's the NASDAQ on a 1 hour chart, and you can see, following the NFP report, we tried to go higher, but markets slipped further lower. There was also a University of Michigan inflation kind of forecast that looked a little bit ugly. Some people, said that's the reason the market sold off. Other people said it was the jobs data. Other people said it was the tariffs. Regardless, the market decided on Friday to go ahead and take some profits on this week. And if we take a look at this kind of overall summary, what we can see here is that we did gap lower on 2 different Mondays in a row. This was the deep seek stuff. And then, of course, this past week, we had the tariff concerns, right? So Trump's tariffs have been making the markets a little bit wobbly, a little bit uncertain about what's coming with that. But we did see an overall pretty impressive rally back for stocks. However, when we start with indices here, what I want you to see is what I see here on the daily chart, which is a whole lot of indecision. And I want to show you something that I found. I was actually going through the COT data in preparation for this video, and I noticed something very interesting. So while you did have some net buying, and by the way, what I'm looking at here, just a preface for new viewers, the commitment of traders data is a great way to track what institutions are buying and selling. You can see this data week to week. It shows us what big money, and when I say big money, I'm talking about hedge funds and banks, they are actually required to report their holdings week to week. And our software here helps to visualize it and make it a lot easier. It comes out in, it's public access information, but it comes in one ginormous, ugly text file with no charts, no visuals. And so what our company does is we take that data and we generate a report that you're looking at here, which makes the COT data readable and accessible to traders. So I want to show you what we saw here. Now, of course, if we take a look at net positioning, this is like long-term stuff. If you're a longer-term investor or long-term trader, you probably just want to take a look at the net positioning and say, look, overall, they're long gold, they're short Swiss franc. You can take a look at institutional money and say that's kind of their positioning. That's long-term though, right? That doesn't change very much week to week. For us traders out there, this is the part of the COT report you want to focus on. We've made it really easy to read. It's our latest weekly COT filing data. It's AKA known as the latest buys and sells, because what this shows you is the week-to-week volume that went in or out of a certain asset. And what you see here, guys, is something very interesting. Let's talk about what they bought first. They bought the Japanese yen, they bought platinum, they bought SPX, they bought pound, they bought dollar, and they bought euro. Okay, so those are your buys. Oh, by the way, they also bought bonds. Okay, we got to talk about that. So they bought bonds, they bought yen, they did buy some SPX, they also bought some dollar. Okay, that's slightly more risk off. Now, SPX is the omission there, but ignore that for a second. Let's look at what they sold. Institutional money sold NAS, Nikkei, which is the Japanese stock market, the Russell, which is US small caps, oil, and gold. Very interesting divergence here because, again, gold has been hitting an all-time high here recently, and the NASDAQ sold heavy on Friday. So what I find very interesting about this is that you have some big money plays that are exiting out of NASDAQ. Sure enough, on Friday, we get a little bit of sell-off. Could that be hinting that we are headed back down to test the lower extreme? Did big money maybe just take profits on Tuesday here and kind of just get out of the way here for in time of Friday? I mean, that's the question. So really interesting to just see that. I do like to keep up with the COT data. You guys know I regularly check in on it, and if I find anything, I share it in my videos. But I do also want to just mention that if you missed out this past week, we're extending the 30% off Edge Finder sale until the end of the weekend. So if you're somebody who's been thinking about getting a copy of the Edge Finder, all the information you need to pick up a copy is in the description down below. Use that promo code that you see on the screen right now, YTVIP, and what you'll see is if you apply that code at checkout, you'll get a substantial discount of 30% off the Edge Finder. You can use all of our tools here throughout, your trading. And I want to just mention something. People have been asking us, do you offer, like, what kind of pricing offers do you do for the tool? That's a very common question that we get. We do lifetime access to the product. Now, why do we do that? I want to just explain something really quick. Some people prefer monthlies. We live in a world where everybody wants to pay minimum payments right now, and they just want to pay, everything monthly for the rest of their life, right? I'm not a fan of that stuff. When it comes to being good with money, and I am a business owner, I'm a trader, I don't mean to brag, but I've done okay for myself in the world, right? So my point is, when it comes to money, I much prefer when I buy something, pay it off really quick and don't endlessly pay monthly payments or debt cycles. I'm anti credit card abuse, all that sort of stuff. If you're the same way, the lifetime access to the Edge Finder, you pay once. And if you use this thing for 5, 10, 15 years, the amount of value that you're going to get for the amount of money that you spend on it will be immense. And I understand that we could probably make a lot of money off of people who just pay monthly forever, but I don't like that. I don't like the idea of subscription models forever. I like the idea of paying something off and then you get to use it. So also what that does is it allows us to get a larger payment up front, which has been how we funded building the tool into what it is today. People who have bought the Edge Finder in the past have directly funded our continued development of the tool. Check this out. We just added something new to the US economic heat map. This little section right here is highly worth checking out. This is just a little bit of a guide because people have been asking us about how the heat map works. They ask, what does a blue mean? What does high inflation mean for markets? And I kind of did this little bias outline. I think it's really easy. Basically, if you have strong growth and high inflation, that's pretty much a booming environment. Commodities do really well in that type of environment. Goldilocks is where you have inflation cooling and growth strong. That's like stocks, best friend. That's their favorite spot to be at. Stagflation, right, where you have slowing growth and rising inflation. That's a kind of a gold scenario. And then, recession is, of course, where people get terrified and they just sell everything risk. They go completely risk off. But I just made that little guide to help out people who are using the economic heat map. This is a new feature that we launched with the tool. And I'm really excited about this one. This is one of my favorite new features of the tool. But while we're on this page, do you guys notice something different about this page? There's a lot of red here compared to what was. So the dollar index, yes, it was up on Friday, but I'm a little cautious now because it's not all blue, right? Some of our reads here have gone red. Like, for example, we had jobs data this week. Job openings were pretty weak. Now, NFP was kind of a mixed one because you had NFP, which came in lower than expected, but there's also revisions that kind of nullify this a little bit. Unemployment rate did go down. That was a positive for the labor market, right? Unemployment rate going down means less people who are looking for jobs unemployed. That's good. Unemployment claims just barely missed expectations, not too big of a deal there. And then ADP this week was actually strong. So, but the point is we're getting more of a mixed reaction here in US economic data compared to where we were a while ago. So just wanted to point that out. And I think the market's sniffing that out just a little bit here. A lot of the big cap earnings this week for NAS and S&P were not super exciting to the market. Amazon sold off, Google sold off, AMD sold off. A lot of kind of exciting names in this market rally didn't have the best earnings you ever saw. And so NASDAQ kind of selling off a little bit potentially off of that as well. So my thought on the NAS, I'm still bullish, but I do think you have room to come down. And if that happens, I'd be waiting for those. I'm not in a rush to go buy the NASDAQ right here. I would much rather wait to see if I can get a bigger dip and maybe scale into some positions that I like. So I want to move on from indices. Let's talk gold here for a second. So gold, interesting kind of way to close the week. And I do want to go back to that COT data just for a second. But before I get to the COT, before I leave the economic heat map, this is kind of a more positive layout for gold. A week ago, if you asked me about gold, I would have said, not really feeling it because all this was blue, right? Everything looked good for the US economy. And it doesn't look bad necessarily now, but we're definitely more mixed, and that kind of allows gold to kind of squeeze in there, right? Where it makes a little bit more sense to me to be bullish on gold here than not. Speaking of that, we go back to the COT data. They sold gold. So perhaps we do have a little bit of a pullback coming first, but here's the way I see it. Top setups page, I believe, yes, it's still giving us a bullish reading on gold. And that is something very interesting to me. I've been on the sidelines for gold for a while, and now actually my system is giving me the bullish confirmation. And I've been saying this recently in my videos, but that does not mean that I go out and just buy gold right here. What it does, however, mean it puts me on the wait list here basically to buy gold. And so what I'm looking for is a pullback. If we come down to this area, I really like that setup because I have Edge Finder confirmation to go with the trade. Now, if it was just a technical move and the Edge Finder was giving me a neutral reading, no trade. There's nothing there for me. But if we get Edge Finder confirmation, which tells me that the U.S. economic data, which is how it computes scoring, is generally okay for gold to continue to push higher. So I like that setup quite a bit. In fact, I bet you this is a 38.2% retracement. Yeah, so if you get a move back down to 2770, let's call it, that's a 38.2% retracement off of this really strong move that we've had recently. That to me looks like a very favorable trade scenario that I would happily take as long as we still have Edge Finder confirmation on the top setups algorithm. So I like that setup a lot. Noticeably, also indices are off the chain here. We no longer have S&P and NASDAQ on the top of the list here. Very interesting to see that. A little bit of, in fact, I'm curious what caused that. Let's just filter by indices for just a second. So let's see what changed here. So Dow Jones getting a -1 here on score. NASDAQ still getting an uptrend here overall. Russell's getting an uptrend, but the COT data holding Russell down. NASDAQ also some of the labor data, some of the stats that are coming out. Services PMIs missed. Retail sales. Yeah, I mean, this just keeps me in the neutral camp. Now the Edge Finder is very much accurately reflecting with the indices chopping around how I feel about them right now. So I'm feeling a little bit more neutral. Again, I wouldn't mind scaling into some specific stocks and things that I like if we do get a larger pullback, but I am going to probably need to see Edge Finder give me some more confirmation before I go buying dips on NASDAQ willy-nilly, because again, we've had a really good stretch on the NASDAQ. It is very possible that you get a move like this, right? That's a 16% move. From here, if you were to get a 16% move, that would put us down to here, by the way. I mean, that's a pullback to 18,300. I'm not necessarily calling for that, but I do think that it is a worthwhile thing to consider. Gold and silver, like I said, I do like the setups a lot. In fact, is silver also, let me just double check here. Silver is a bullish reading on the Edge Finder, so that may also be a setup. In fact, I like that one maybe a little bit more than gold even. If you get a 38.2% retracement, I may take a stab at longs on silver. I also like the 61.8, so maybe attempt number 1, attempt number 2 for me on silver this week would be a pullback to those levels. I like that quite a bit personally, and I'm going to watch that going into this week. Let's see, on the bearish side, we continue to have a lot of yen bearishness or yen pair bearishness. Really, that is yen strength. Just let's be clear, when something gets a dollar yen gets a very bearish reading, that's basically being bearish dollar, bullish yen, bearish Swiss, bullish yen, bearish CAD, bullish yen. That being said, however, for the currency traders out there who are watching the yen with me, here's my issue with it. I like the setup. I like the idea, but the chart is kind of running away. So I marked up my chart on CHF-JPY, which is a pair that I like for this possible trade, specifically because the swap, the carry trade, can be very costly when shorting pairs that have the yen in it because the yen offers very low interest. So you're buying, or you're shorting a currency that offers high yield, so you have to pay that yield when you borrow that money. And then you're having to buy something that offers very little yield. So the carry trade or the swap on your Forex brokerage is very negative because that's just how the carry trade works. So the Swiss offers a very low interest rate though. So what happens is you can short it or sell it and borrow Swiss franc for a low cost, and then you get a low yield from yen. So the differential between these two is very, very low. In fact, I've got something to show you. We do have a tool for this. You guys know I'm like the Bob the Builder here with this edge finder thing. We do have a tool exactly for what I'm talking about. If you ever want to look at the carry trade and understand it better, we do have a whole thing about this on the edge finder. Just scroll down to carry trade scanner, and you can actually scan, especially for my currency traders out there who love the carry trade. The concept here is you're looking for currencies. If you want to collect positive swap, you'd want the biggest possible divergence. Check out what we've actually done is we've filtered the divergence here. Dollar Swiss has a very large interest rate divergence. If you buy dollar and short Swiss franc, the carry or the positive interest differential gets credited to you by your brokerage through the form of swap payments, right? So you know how when you hold currency trades overnight, if you're a currency trader, some of you guys are, some of you aren't, but for my Forex friends out there, when you hold something overnight and you either get charged or you get credited a payment, that is the carry trade in actuality. So when we talk about Swiss yen, if you're going to get short, let me show you something. And what you can do is if you have the edge finder, just type in JPY and try this out for yourself. So here's yen. Basically, if you're bullish the yen, the worst one to short in terms of strictly a carry trade would be dollar yen. Why? Because there's a huge interest rate differential. Now, if you're buying dollar yen, then you collect that. But if you are shorting that, you pay a hefty fee to short pound yen and dollar yen due to the central bank divergences. So Swiss franc, however, offers very little to no swap costs. So that is something, again, that's just straight up being intelligent with your trading. If you're going to be a swing trader in Forex, you need to know about the carry trade. You cannot go one day further without fully understanding how the carry trade works. I have videos on it. Search it up on YouTube. And if you do not have the edge finder, what are you doing? Get the edge finder. I know I'm giving you a sales pitch, but genuinely, I mean, we do have tools for everything because the community basically drives the development of the edge finder. What people ask for, we build, and that is how we built this and the COT data and the top setups algorithm, and everything is kind of inspired by both what we, myself and Frank, the two, kind of idea generators behind the tool. That's how we build the tools. We build things that either we use in our own trading or the community heavily requests. Let's continue on because we've got a lot to get through here. So we talked gold, silver, we talked indices. If I'm looking at Bitcoin, for example, Bitcoin, a little bit of a disappointing chart for me. I was playing for the breakout here, and I really was ready for it. I was so excited. And then we had this kind of break. This stopped me out. Now, I was long over here, trailed out right here. So I got out for a profit on my Bitcoin trade. And now it's just kind of, in some ways, I'm feeling justified because it's like, okay, continued lower, great. I'm out of the trade. Like, I feel smart for getting out, but at the same time, I just shoulda, coulda, woulda. I wished it had kept going through those highs. But again, the market does not care what I wish for. At the end of the day, we've now seen Bitcoin go into a sideways consolidation market once more. I am looking for one of two scenarios, and you guys probably know from a technical basis where I'm going from this. Either a breakout through the lows and continuation there, or breakout through the highs and continuation there. But for now, there's nothing for me to do on Bitcoin. If I get a sold reading into this area and the edge finder gives me a bullish confirmation, I'm probably going to buy that dip. But I'm not going to go out there and just buy Bitcoin at a level of support, because what if it just does this for the next 3 months and that money is quote unquote dead money? I might as well have bought something else or sold something else. So I'm waiting for setups, but currently if I take a look at my top setups, I do not have Bitcoin on the list as a top setup, so that is going to be a pass for me at this time. I'm really focused on yen crosses. I'm looking at metals like gold and silver. And that is pretty much it for momentum trades. I do have some other things going on. I do have a TLT position. I'm not logged into my brokerage, but you guys can go back and watch any of my videos this week. I've been talking about TLT. I actually added to this trade. Momentum starting to pick up here. And I also made the quick reference to the fact that TLT and Japanese yen is actually quite correlated. So I'll do this experiment once more. Keep your eye on this screen for a second. Stay right there. Look at the chart. Ready? Hold on. Here's JXY. So this is TLT. Here's Japanese yen. See that? They're very, very correlated. You can go do a Google search on how that is. It's a little bit of a complex answer there, but generally TLT and Japanese yen both are risk-off assets, and so they typically do move together. And so with such strong yen readings on the Edge Finder right now, I'm going to continue to hold my TLT position. In fact, on Friday, I actually added to the trade as it pulled back into this range. So I do like TLT. I still have a position there. It's actually currently my largest position. And if it fails out, then I'm going to get out of the way. But I would like to kind of stay in this trade, see if we can actually catch an upswing on TLT. We've been in this downward momentum for a while, and the breakout seems to be real here. This is a trade that I'm tracking and sharing inside of our VIP room. As always, every trade that I take gets shared in our VIP. Like I shorted pound yen this week. If you're not in the VIP room, you also can join that in the description down below. And for those of you who are interested in the Edge Finder, you can bundle the two of them and get super low prices on both. That is an option at checkout if that's something that you're interested in. So yeah, I do like TLT. I'll continue to be holding this position as long as we can kind of continue that momentum to the upside. On the Forex side, dollar looking like it's trying to break out here, a little bit of a hold of support. Or at least trying to not break out to the downside is what I really meant. It's just holding support. It's not really doing too much either direction. If we take a look at some individual currency pairs, euro dollar, I'd be interested in shorts if it does continue higher and we get an Edge Finder reading for a trade. I do like that quite a bit. Dollar Swiss franc looks really good overall, but then we get into the yen pairs and they just look really bearish, right? So here's dollar yen. It looked like it was trying to trend higher, like you had momentum forming here, and then we just completely toppled over, and it does look very bearish. In fact, I don't love dollar yen as much as I love things like pound yen. I mean, I shorted this one, made some money this past week. I'll be looking for another opportunity to possibly get short some yen crosses. Pound yen is on the list, but I think for me, like I mentioned earlier, I really do like that Swiss yen for the capability of holding it longer term. So if I get something like this, and I want a dollar cost average into Swiss yen shorts, I don't want to hold something that's going to cost me a ton to hold for a while, right? So I'm a little bit longer term with Forex, so I'm very interested in shorting Swiss yen, but I don't want to pay $1 million in swaps. So how am I going to do it? Well, I'm going to look probably at Swiss yen, which we just got done covering, is a less costly way to kind of bet on the yen. That, and also maybe the most cost-efficient way, in my opinion, is actually trading TLT, which is where I have the bulk of my actual investment into the idea that I'm discussing, because TLT, not only does it not charge me swaps to hold, it actually pays me a dividend to hold. It offers you 3.74% to hold over a yearly basis. Now, I know that's not a lot, but think about if you hold a yen pair short, it might cost you like 12% per year. So instead of losing 12% just in swaps, I'm gaining, almost 4% just in holding the TLT. So yeah, I mean, I like the trade. I keep coming back to it because it is kind of where I'm most convicted at this time. And we'll see if we do get continuation. I would actually really like to see a bit more, because I'm pretty cash heavy on my positioning. I'd love to see the markets roll over a little bit, TLT get a bit of a bounce. I think that with the tariff uncertainties, you may get that, just as markets are a little bit wobbly recently. And we'll see. I mean, that's kind of my positioning right now. I'm a little bit more defensive. I do love the indices long, but I either need, like I said earlier, breakouts or pullbacks and Edge Finder confirmation for both. So that's what I'm looking for. I hope this was helpful to you guys. Remember, take advantage. Last day of the Edge Finder sale, 30% off using promo code YTVIP. Thank you guys for watching. Have a great day ahead.